Right. Let me also bring on board Abhishek Kapoor, Group CEO, Purvankara Limited. We'll continue our chat. Abhishek, I want to quickly first off understand from you. Firstly, welcome. Good morning.
Good morning.
Let me understand from you how demand is playing out currently, because the last we spoke, you spoke about very robust demand. You spoke about execution being something that y'all are looking at very actively, and that's basically the focus has shifted towards execution given the kind of demand that there is. Is demand really holding up, and how is pricing shaping up for you?
Harsh, as an industry, I can share with you, I think demand is continuing to hold up. The challenge really is on the supply side, as I mentioned earlier, to bring in new launches, and the supply is still continues to be a challenge in most of the markets that we operate in. I would expect now with the festive season that the demand will be better than the first quarter, and then going forward, the third and the fourth quarter definitely will be a better quarter, as it is, annually, because that's the general real estate cycle, especially in residential for us. Most of the demand really comes in the third and fourth quarter. So I think the industry is looking forward to the festive season.
Right, Abhishek Mahima also joining in. You have Abhishek Mahima also joining in. You have a couple of flats in pipeline. I want to understand what is happening on the execution side of things, and overall in FY25, what kind of overall execution timeline are you looking at?
Mahima, thank you. As far as execution is concerned, last quarter we delivered about 1 million plus square foot. Our goal this year is to deliver over 4 million square foot, and that's a target we are working towards. We believe that as we increase our launches, for example, last year we sold more than 7 million square foot. This year we are launching about 17 million square foot, of which about 12 million square foot is new launches, and 4 million plus is from the previous phases of previous launches. So we expect that the delivery will continue to pick up in the coming years, and that continues to be our focus. And of course, that is resulting into the cash flows and collections, because if you see now our quarterly run rate of collections has gone over 1,000 crores, and we will continue to see that trend improving.
Got it. And how is the execution pipeline looking? Is Q2, Q3, Q4 pretty much balanced in terms of execution, or do you believe that a lot of it will be back-ended towards second half of this year?
Look, the first quarter, as I said, over 1 million square foot. We are expecting the second quarter to be pretty much similar in nature. A lot of delivery will happen in the fourth quarter for sure. Third quarter, we will see where we land, because it's also a question of, how many occupation certificates we are able to get upon completion, because we have to go through plethora of, approvals in terms of completion before we start the handing over process. And from the date we get the OC, there is a process also of handing over. While I say that, I must tell you that, we have about 32 million square foot under production, and we continue to focus on that entire 32 million square foot. And on an ongoing basis, if you look at our burn rate, our quantum of money spent on operations, that is continuing to scale up, which basically means that eventually this product which is currently being constructed and the money being spent on will come to delivery.
All right. And Abhishek, in Q1, we saw that Provident segment had a significant increase of bookings, but the luxury segment did see some kind of decline. So what is the kind of strategy that you are adopting? Which is the kind of segment that you're focusing on, one thing? And what are the kind of trends overall that you're observing in the market?
See, our demand as we see it is pretty much homogeneous across all categories, whether it is mid-mass or luxury category. In fact, in the first couple of quarters, we have had robust performance from Provident, also on the back of the new launches that we have had in Provident. We're expecting the launches to come through in Purvankara in the coming quarters. As I said, The challenge really is more on the launch side and the supply side. And as those launches kick in, you will see a fairly balanced growth in both the numbers, including Purva Land. We continue to focus on that product as well. We have an annual goal. I think we have shared the fact that we are going to launch about 17 million square foot. Our goal will be to make sure that we are on target there.
And what's the target with regard to overall collections for FY25? How are we shaping up there?
Like I mentioned, our quarterly run rate is about 1,000. So, we are at least at 4,000 for sure. But you add to that new launches, I'm sure you will see much better collections. We intend to continue to grow the collections. Of course, operations and delivery will also help. So we will continue to see upward momentum in the collection, especially in the third and the fourth quarter as we do the new launches.
Right. And what about realizations? So you're talking about such robust demand continuing. Do you therefore, is there a continued uptick where realizations is concerned, and how much of an uptick really, because the base is getting higher now?
Look, I think, as an industry, we've been very consistent in the price increase now, specifically in the last couple of quarters. My sense is that we would be expecting a price increase of single digits, more inflation linked. I would expect it to be average industry escalation of 8 to 9% annually. But from project to project basis, you will see different price increases in different micro markets. I think that's where the nuance is. But as far as Puravankara and Provident and Purva Land is concerned, again, it's more a factor of mix of inventory that we are bringing to the market and mix of inventory that is getting sold. And therefore, you will see, while on an individual project level, you will see continued appreciation. But on an overall realization level, you will see, depending on the mix of inventory that we bring to the market, on how the average realization moves. For example, if you look at Purva Land, typically our realizations are anywhere between 3,000 rupees to 5,000 rupees a square foot. Whereas in Provident, it would be somewhere around 8,000, and Puravankara will be 10,000 plus average realization. So depending on the mix and volumes that you sell, you will see the overall average moving. However, on a project level basis, you will continue to see the realization go up.
All right. And in terms of debt, your net debt has seen a slight uptick in Q1 as compared to Q4. I want to understand that what are your plans with respect to managing these debt levels, and where will the debt level be at by the end of FY25?
Look, as I mentioned, our debt, we are expecting to keep it at similar levels. Our goal is on a per square foot basis to keep the debt under 1,000 rupees a square foot of area under development, and we'll continue to target that number. And on an absolute number, maintain it at similar levels. It may marginally go up and then may come down depending on, the transactions that we are doing, because it's a constant process of churn of debt, because debt is getting constantly repaid as well as we are doing also new acquisitions. So, it will be a consistent churn, but our target is to keep it at similar levels by the end of the year.
Okay, and with regard to geographies, of course, new launches you've spoken about, but talk to us about the next 3 years, right? What's the kind of thought process you're looking at? Is it going to be more focused on Bangalore, Kochi, Chennai and the like, or are you going to move towards a Pune or a Mumbai and beyond?
Look, that's pretty much reflective of what's happening currently in the acquisition. I mean, if you see our last, this calendar year acquisitions, we have done acquisition in Thane in Mumbai. We have signed up in Lokhandwala. In fact, we've just added 4 more societies in Lokhandwala. We have just announced a project in South Mumbai, our first project in Beach Candy. We have also been appointed as a preferred developer in Pali Hill. If you look at, the quantum of investments that's happening in the West clearly indicates that in future we will have significant contribution coming in from the West, while we continue to consolidate and announce our acquisitions in South. For example, we have acquired 2 projects in Electronic City area in Bangalore, and I'm certain that you will see more and more announcements as far as the southern markets are concerned. So our goal is going to be definitely to make sure in South we consolidate our position and in the West we expand our position. While we have now started to explore NCR, and we are hoping that in next 2 years to 3 years time frame, we'll start expecting some contribution coming in from the NCR region.
All right. Well, Abhishek, thank you so much for giving us those insights on Puravankara, and thank you so much for taking our time and speaking with us at NDTV Profit. But with that, we're completely out of time on this edition of Small Mid Cap Show. But keep watching NDTV Profit for more news and updates.